Have you ever found a trade setup that looked great, only to realize later that your risk was way too high? One of the easiest ways to avoid that mistake is by using the position tool in TradingView. And here's the best part. You can now go from analyzing a trade to creating an order directly from the chart. In this video, I'll show you exactly how it works, how to calculate risk and reward in seconds, and a few beginner mistakes you should avoid. Let's jump right in. I'm inside TradingView, and the first thing we need to do is locate the position tools. On the left side of the chart, you'll find the Drawing Tools menu. Open it up and look for long position and short position. These tools are designed to help you plan trades before risking any money. Let's start with the short position tool. I'll select it and click anywhere on the chart. As soon as I do that, you'll see a trade box appear. This box represents three important parts of a trade: your entry, your stop loss, and your take profit. If you're new to trading, think of it this way. The stop loss is where you'll exit if the trade goes against you. The take profit is where you'll exit if the trade moves in your favor. The goal is to make sure the potential reward is worth the risk. Now watch what happens when I move the take profit lower. Notice how the risk-reward ratio changes automatically. The further away the profit target is, the larger the potential reward becomes. But that's only part of the equation. Let's move the stop loss further away as well. Now the risk-reward ratio starts getting worse. Why? Because we're increasing the amount we're willing to lose while keeping the reward relatively similar. This is exactly why the position tool is so useful. Instead of guessing, you can instantly see whether a setup makes sense. Here's a simple example. Imagine you're risking $100 to potentially make $300. That's a 1-to-3 risk-reward ratio. Many traders prefer setups where the reward is at least 2 or 3 times larger than the risks. Of course, every strategy is different. But understanding this concept is extremely important. Now let's look at a common beginner mistake. Many new traders focus only on where they think price will go. They ignore how much they're risking. A setup can have a high probability of success and still be a bad trade if the risk is too large. That's why planning the trade before entering is so important. And this is where TradingView recently made the process even more convenient. Once you've planned your trade using the position tool, you'll see an option to create an order directly from the setup. Click the order button. An order ticket will appear. Instead of manually entering all your levels from scratch, TradingView can use the information you've already defined on the chart. This saves time and reduces the chance of making mistakes. Inside the order ticket, you can review your trade details. You'll see options for different order types, including market orders, limit orders, and stop orders. For this example, we're focusing on limit orders. A limit order allows you to specify the exact price where you want your trade to be executed. This can be useful when you don't want to enter immediately and prefer to wait for a specific price level. Once everything looks correct, you can submit the order. Now you'll see the planned trade displayed directly on the chart. This makes trade management much easier because you can visually monitor your setup. But what if you're still learning and don't want to risk real money? That's where paper trading comes in. TradingView includes a built-in simulated trading environment. You can practice entering trades, testing strategies, and learning how order execution works without putting any real capital at risk. This is one of the best ways for beginners to build confidence. You can experiment with stocks, cryptocurrencies, forex pairs, and many other markets while learning how the platform works. Another feature worth knowing about is broker integration. If you open the trading panel, you'll find a list of supported brokers. If your broker is supported, you may be able to connect your account directly to TradingView. That means you can analyze charts, plan trades, and execute orders all from the same interface. It's a much more streamlined workflow. So, let's quickly recap. The position tool helps you visualize risk and reward. It allows you to plan trades more effectively. It helps prevent poor risk management decisions. And now, it can also help you move directly from analysis to order creation with fewer steps. If you're not already using this feature, it's definitely worth trying the next time you're reviewing a trade setup. Thanks for watching. If you found this tutorial helpful, leave a like and subscribe for more TradingView tutorials, charting tips, and beginner-friendly trading education. And let me know in the comments. What risk-to-reward ratio do you usually look for before entering a trade? I'll see you in the next video.